It's happening. The moment that crypto enthusiasts, investors, and skeptics alike have been waiting for is finally here. Bitcoin is once again making headlines around the world, and the excitement is impossible to ignore. The markets are electric. Bitcoin is smashing records, and the energy's palpable. There's a sense of history in the air, as traders and investors witness something truly extraordinary unfold in real time. As of October 7, 2025, Bitcoin hovers around $123,000, having just broken through $125,000 for a new all-time high. The numbers are staggering, and the pace of this rally has left even seasoned market watchers in awe. This isn't a speculative pump, it's a fundamental shift in how the world views Bitcoin. Institutions, corporations, and even governments are now taking digital assets seriously, and the narrative around Bitcoin has matured. October's rally feels different, more mature, more powerful, and more sustained. The market is no longer driven by hype alone, but by a growing recognition of Bitcoin's role as a store of value and a hedge against uncertainty. Even with macro headwinds like the recent US government shutdown, Bitcoin rallied, signaling its decoupling from traditional markets. This resilience is drawing in new participants who once doubted its staying power. Every dip has been met with stronger buying pressure, and the August correction to $112,000 now looks like a launchpad. The conviction among long-term holders has never been higher, and each pullback is seen as an opportunity. Weak hands have been shaken out, leaving a healthier, more sustainable climb. The market is now dominated by those with vision and patience, ready to weather volatility for the promise of greater gains. With the $100,000 psychological barrier behind us, the market is in price discovery mode. No one knows exactly where the ceiling is, and that uncertainty is fueling even more excitement and speculation. The question now isn't if Bitcoin will keep rising, but how high it can go. Analysts are revising their forecasts upward, and the sense of possibility is almost limitless. The journey is just beginning. As Bitcoin enters uncharted territory, the world is watching, and the next chapter is waiting to be written. Wall Street's most influential institutions are now making some of the boldest Bitcoin predictions we've ever seen. The world's financial powerhouses are no longer sitting on the sidelines, they're stepping up with 6- and even 7-figure forecasts that are turning heads across the globe. Citigroup, one of the world's largest banks, has laid out a base case of $181,000 for Bitcoin within just a year. And if things go even better than expected, their bull case shoots up to $231,000, a number that would have seemed unthinkable just a few years ago. Even in their most conservative scenario, Citigroup's bear case still puts Bitcoin at $82,000, which is more than double its previous all-time high. These aren't wild guesses or hype, they're grounded in real data driven by surging institutional demand and a rapidly shrinking supply of new coins. The math is starting to look undeniable. BlackRock, the world's largest asset manager with over $10 trillion under management, has set a long-term target of $700,000 per Bitcoin. That's a figure that could redefine the entire crypto landscape. Meanwhile, ARK Invest's Cathie Wood is doubling down on her $2.4 million target, betting that Bitcoin will not only rival gold, but also challenge sovereign bonds as the world's premier store of value. She sees Bitcoin as a once-in-a-generation asset. Standard Chartered, another global banking giant, projects $200,000 by 2028, pointing to what they call unstoppable institutional adoption and a fundamental shift in how big money views digital assets. The growing consensus among these financial titans is clear. Bitcoin's value could soon be an order of magnitude higher than today, and the momentum is only building. These forecasts aren't just numbers on a page, they're opening the floodgates for institutional capital, as more and more major players look to get exposure to Bitcoin. Morgan Stanley's guidance alone could channel as much as $80 billion into crypto markets, setting off a chain reaction that could reshape the entire financial system. Pension funds, university endowments, and corporate treasuries, once cautious and conservative, are now actively exploring Bitcoin as a core part of their portfolios, signaling a new era of mainstream adoption. Wall Street's roadmap is fueling the next wave of capital flows, and the world is watching as Bitcoin's story enters its most exciting chapter yet. The introduction of spot Bitcoin ETFs has truly revolutionized the financial landscape, opening the doors for a new era of mainstream crypto investing. For years, institutional investors were hesitant to enter the Bitcoin market due to regulatory uncertainty and lack of secure investment vehicles. Now, with the arrival of these ETFs, the barriers have been removed, and the market is experiencing a seismic shift. In 2025 alone, spot Bitcoin ETFs have attracted over $54 billion in net inflows, a tidal wave of institutional capital that's reshaping the entire crypto ecosystem. This unprecedented surge in investment is not just a number, it represents a fundamental change in how major players view Bitcoin as a legitimate asset class. BlackRock's ETF launch was the starting pistol for this historic bull run, igniting a wave of confidence across the industry. Since June 2023, Bitcoin's price has soared over 250%, fueled by the credibility and trust that institutional giants like BlackRock bring to the table. The market is now more stable than ever before, with fewer wild swings and less volatility. Institutions are buying and holding for the long term, providing a solid foundation that was previously missing from the crypto space. This shift is creating a more mature and resilient market environment. CoinShares reports record-breaking weekly inflows, and this isn't just a US phenomenon. Global interest is surging. From Europe to Asia, financial centers around the world are seeing a dramatic uptick in Bitcoin ETF adoption, signaling a truly international movement. Corporate digital asset treasuries now hold a staggering $135 billion, showing real committed capital from some of the world's largest companies. This level of investment demonstrates that Bitcoin is no longer just a speculative play, it's a core part of institutional portfolios. Infrastructure is rapidly evolving to meet this demand. BlackRock's Aladdin platform now integrates seamlessly with Talos, enabling sophisticated institutional crypto trading and risk management. This technological leap is making it easier than ever for big players to participate. This isn't a passing trend, institutions are here to stay. Their involvement is deepening, with more firms allocating resources and building dedicated teams for digital assets. The flow of capital is accelerating, putting relentless buying pressure on Bitcoin's limited supply. As more institutions compete for a finite number of coins, scarcity is driving prices even higher. The ETF era has fundamentally changed the game. The floodgates are open, and institutional money is now a permanent force in the Bitcoin market, shaping its future in ways we're only beginning to understand. Massive demand is colliding with incredibly scarce supply. Over 70% of Bitcoin hasn't moved in a year. Long-term holders are locking it away. Exchange balances are at their lowest since 2017, just as ETF demand hits fever pitch. This is a classic supply squeeze. Every new dollar chases fewer coins, driving prices higher. The recent halving slashed new supply, intensifying scarcity. ETFs must buy real Bitcoin to back their shares, but there are few willing sellers. Whales are accumulating on every dip, draining the liquid supply even further. Institutions and private investors are both piling in, creating a relentless supply shock. The result? A market where price has nowhere to go but up. Bitcoin's scarcity is now its greatest strength. The supply shock is real, and it's only getting stronger. Demand is ferocious, supply is tight. Bitcoin adoption has gone mainstream. Corporate America is all in. Walmart-backed OnePay is rolling out crypto trading and custody to millions via its mobile app. This move normalizes Bitcoin for everyday consumers and signals a shift in corporate strategy. Other giants are following suit, racing to integrate crypto into their offerings. Galaxy Digital's Galaxy One platform now lets retail investors trade crypto and stocks side by side, even offering yield on cash accounts. Grayscale has introduced staking for its Ethereum and Solana trusts, making crypto even more attractive. These innovations are breaking down barriers and creating new on-ramps for mass adoption. Bitcoin stands to benefit most as the foundational asset. Bitcoin is evolving beyond digital gold. It's becoming a platform for innovation. Layer 2 solutions like Bitcoin Hyper are enabling fast, cheap transactions and new applications like DeFi and NFTs. The Solana virtual machine powers these advances, attracting millions in investment. BTCFI, Bitcoin DeFi, is emerging, but most holders haven't even tried it yet. As these tools become more accessible, billions in Bitcoin could power a new digital economy. Bitcoin's dual identity, as a store of value and a productive asset, makes it more compelling than ever. It's not just something to hold, it's something to use. The tech renaissance is just beginning. Regulatory clarity is finally here, unlocking institutional capital. The SEC now allows state-licensed trust companies as qualified custodians for digital assets, a game-changer for investment advisors. This green light means trillions in managed assets can now access Bitcoin safely. Globally, sensible regulation is replacing bans. BitGo and SWIFT are building trusted infrastructure. Europe's MiCA approval and Dubai's VARA license are opening new markets. Even the old guard, like SWIFT, is adopting blockchain to modernize payments. The war on crypto is over. Integration is the future. Institutions now have safe, regulated pathways into Bitcoin. The era of big money is here. In a world of rising inflation and economic uncertainty, Bitcoin is emerging as the new safe haven. Gold once held this role, but Bitcoin's digital scarcity and global accessibility make it a superior hedge. Only 21 million Bitcoin will ever exist. No central bank can print more. As governments run deficits and print money, Bitcoin's value proposition shines. Its correlation with traditional markets is declining, making it a true diversifier. Investors now see Bitcoin as a non-sovereign store of value, not just a speculative asset. Sophisticated investors, family offices, and corporations are all seeking protection from inflation. Bitcoin is more portable, verifiable, and divisible than gold. As the world digitizes, so does the safe haven asset. Bitcoin is the hedge for the digital age. The bullish case for Bitcoin is strong, but risks remain. A global recession or credit crisis could trigger sharp corrections, even for Bitcoin. Regulatory risks haven't vanished. A sudden policy shift could spook the market. Security breaches or black swan events could shake confidence. Parabolic advances often lead to painful pullbacks. Overbought markets can correct fast. Many analysts see $100,000 as a key support level that may be retested. Navigating this market requires discipline and respect for volatility. The opportunity is huge, but so is the need for caution.